You followed your framework, you've executed your trades with discipline, you've been actively observing the market and yourself. Now it's time for step 3 of the Edge development loop, performance review and data collection. This is where your process turns into measurable progress and where real growth begins. Most traders either skip this step or rush through it. They treat reviewing as a quick check. Did I win or lose? But surface level results won't build your edge. Real review is about evaluating your decisions, not just your outcomes. This is the step where your edge is either confirmed or exposed. It's how you separate one-off wins from repeatable results. And this shouldn't just happen occasionally. You should be reviewing on a daily, weekly, and monthly basis as part of your workflow. Start with a simple but powerful question. Did I follow my plan exactly? For every trade, log whether entry criteria were met, your risk model was respected, and your trade management protocol was followed without deviation. If there were any deviations, note them. This helps you distinguish between execution errors and systemic flaws in your strategy. You're not just a trader here, you're the coach reviewing game footage. Now we shift to data collection, your objective record of how each trade actually performed. Personally, I use Excel to track every valid trade, and I exclude trades that didn't follow my playbook. Why? Because trades that break your rules will only pollute your data set. Remember, the goal is to test your edge, not just your execution. Execution is critical, but it's a separate challenge and can be managed in parallel. I also keep 2 logs: executed trades, which includes the outcome breakdowns and performance of trade management protocols, and the rejected trade IDs, where I justify why I passed. Both logs are essential. Many traders don't need more winners, they need fewer avoidable losers. Now, I can spend a lot of time on every variable that you can track, but I suggest keeping things simple to start with. If you don't understand everything right now, that's okay. There will be future videos that go into more depth on every variable included in this list. At a minimum, your Excel log should include date, day of the week, time entered, session entered, the currency pair traded, the direction of the trade, the time frame traded, the framework applied, the point of interest type or POI, the trade type, i.e. was it a pullback or a breakout, the confirmation criteria, the maximum favorable excursion as well as the maximum adverse excursion, and was the final target reached? Like, you can track results of different risk models to see which ones give you the highest return. The more consistent your data, the more reliable your insights. Now, data doesn't just mean numbers. This is where your execution notes from step 2 become gold. What were you feeling before entry? What were you tempted to do but didn't? Ask yourself, were you itching to take profit early? Did emotion delay or accelerate your decision making? Did a prior loss cause you to overtrade? By combining objective trade outcomes with subjective experience, you gain the full picture, not just a performance chart. You're not just reviewing trades, you're reviewing yourself. So how much data is enough before it becomes useful? The answer, enough to reveal patterns, not one-offs. That might look like 10 to 20 trades per framework, 1 month of trading with consistent execution, or simply a large enough sample to observe recurring behaviors or trade outcomes. Don't overanalyze after just a couple of trades, but don't wait for a 100 either. You're building an evidence base, not gambling on guesses. Let's not overcomplicate this. The goal isn't to obsess over every tick or strive for perfection. The goal is to build a feedback loop where data drives decisions. You're assessing how your system performs, you're identifying how you perform within it, and you're collecting insights that will directly feed into step 4, analysis and pattern recognition. So let's recap. Performance review reveals whether you followed your system or deviated, and data collection builds the foundation for refining and validating your edge. And consistency in trading and tracking is what makes your edge measurable. In the next video, we'll explore step 4 of the edge development loop, data analysis and pattern recognition, where your logs become your competitive advantage. If this was helpful, be sure to like, comment and subscribe, and let's keep building your edge together.